Most startups don't die because the founders are lazy or the idea is obviously terrible. They usually die for the same reasons over and over again. In this video, I want to walk you through the 6 common reasons that startups fail one by one and help you stress test your own company against them. I'm Carmelo Giuliano, general partner and co-founder at Arcanum Ventures. We incubate, back, and advise early stage teams in AI, Web3, blockchain, frontier tech, you name it. And we've seen our fair share of blow-ups and failure. If you're building and investing and you want fewer surprises and more signal, stick around and hit the subscribe button below if you want more content like this. Reason number 1, and let's start with the most brutal one first. Nobody actually needs what you're building. Across more than 100 startup postmortems analyzed by Crunchbase Insights and others, about 35 to 42% of failed startups said they simply built something the market didn't need or want. Just the problem wasn't painful enough or the solution wasn't compelling enough. In real life, it often looks like this. People say, that's pretty cool. They take a demo, they sign up, but usage is weak, retention is pretty low, and revenue is always right around the corner. All right, reason number 2, the second biggest reason that's simple on paper but painful in reality, teams simply running out of runway. 29 to 38% of teams surveyed by Crunchbase Insights cited this as the primary cause why they couldn't succeed. And this wasn't a case of we couldn't raise money. Maybe they raised money, but they ran out due to bad budgeting or spending on the wrong things, hiring too many people too early on, or putting money into marketing before you've even figured out the product market fit for the very thing you're building. That's what I like to think about it. Your cash is essentially your learning budget. Every single dollar should have a core purpose, and it should buy you faster, clearer answers to, does this work and can it scale? See problem 1 that we just discussed. How many months of runway do you actually have in reality? And what specific milestones make you fundable for this next upcoming round? And are you starting those investor conversations when you're strong or when the bank balance is already running on empty and things are getting scary? If funding disappeared for 12 months, what would you cut this week? That answer is usually a clue to what's not essential right now. And a lot of teams tend to get a little bit crazy with spending. The good thing is this is probably the most fixable problems that we're going to cover today. Reason number 3, the business model and unit economics simply just don't make sense. In Crunchbase Insights breakdown, about 18 and 19% of startups cited a flaw of unsustainable business models as a key reason for failure. You could have a great product and product market fit too, and still be building a machine that burns $1 to make 50 cents. Red flags that you should simply not ignore: you rely too heavily on discounts or subsidies to get adoption. Maybe your customer acquisition costs keep rising, but your pricing does not move. Your path to profitability only works at some mythical scale you don't have a realistic route to. Boil it down to these 3 questions. What does it really cost you to acquire one customer? How much gross profit do you make per customer over a reasonable time frame? And how long does it take to earn back what you spent to acquire them? If you can't answer those simply, you're guessing. The best founders treat their business models like a product. They iterate on pricing, packaging, and channels until the math starts to work in their favor. The 4th reason almost nobody writes in their postmortem is we simply didn't have the right team and execution for the mission. This is my favorite and, at the same time, least favorite excuse for why startups fail. And this is the thing that we're most equipped to help with at Arcanum Ventures. Every day we're fielding more and more offers to work with us, helping guide and incubate teams that have the right idea and the right mindset and the right skills and experience and capabilities, but are missing that operational push for that organization. Simple mistakes, breakdowns in communication, these sort of things can kill good companies with promising ideas. And we absolutely hate to see it. But as we mentioned with a few of these other ones, it's quite fixable if you work with the right teams or advisors. Reason number 4, competition and differentiation. Around 19 to 20% of failed startups say they were outcompeted. They underestimated rivals or simply never developed a real edge. Startups rarely die because competitors exist. They die because they can't clearly answer why us and why now. If your pitch sounds interchangeable with 5 other decks, trust me, it does. We listen to a lot of these pitches. And if your moat is we'll do it faster or bigger or better, then you're probably not making a compelling case and you're not going to stick out. Especially with inundated fields like AI, everybody's building something AI related right now. So it's going to take more and more to set yourself apart in what you're building, your novel solution. And you can't just bolt on AI to everything. This plus AI, that plus AI. It simply isn't compelling enough for investors like us. If you can't simply explain your edge in 1 or 2 clear sentences that a customer would agree with, you don't have it yet. And that's okay. Just don't pretend you do. And a lot of people do. Go back, refine, sharpen it, test it, validate it, and bring something that you actually think is useful to the market, something that your competitors haven't thought of yet. And finally, saving the best for last, reason number 6 why startups fail is just timing and macro. It's the hardest one to fix, but the easiest one to explain. I think anybody knows it. There's been a fair share of companies or teams that have brought something to market far too early, maybe a year or 2 before a narrative really takes off. Whether it's agentic AI, robotics, LLMs before LLMs were really in vogue, it doesn't matter. There's teams that have built stuff that the market doesn't know where to place, doesn't know how to price it or what the value is. We just simply haven't reached it yet. There will always be this in tech startup and investing. It's just up to the teams to maintain and stick around long enough for them to have their time in the sun. And finally, we get to my favorite reason why startups fail, number 6, timing and macro. It's the easiest to explain on paper, but probably the most difficult to solve for. There's no helping you if you had the idea too early on. And we see lots of teams that decided to design something 1 or 2 years before the market was ever ready for it, before that need was validated, before anybody, including knowledgeable VCs and investors, were ready to invest in such a narrative. So simply staying alive long enough for the world to discover and catch up to you, that's easier said than done, but there are other ways you can maintain and stay alive. More or less, you have to be careful with pivoting. Don't pivot too much or too often, or execute too big pivots. You have to do it tastefully, mindfully, in the right way at the right time. So we've now just covered the 6 biggest repeatable reasons why startups fail. And together they show up in the majority of documented failures, not just a few edge cases. No real market need, runway and cash discipline, broken unit economics, team and execution gaps, weak differentiation, and of course, mistimed bets, not timing the market correctly. Please take a minute after this video and just score yourself, even if it's tough, on each of those 6 areas. Where are you strongest? Where are you most at risk? And what's one concrete move you can make in the next 30 to 60 days to de-risk in just one of those areas, ideally more? At Arcanum Ventures, we incubate, invest, and advise, and this is the lens that we see things through. If this video was helpful, please do these 3 things. Subscribe down below for deep dives on fundraising, product, and strategy. Drop a comment with which of these 6 hits home the most for you right now, and maybe we forgot something. And if you're building something ambitious and want to partner in those trenches, there's a link in the description to connect with us. I'm Carmelo from Arcanum Ventures. Thank you for watching, and go build something people actually need. We'll be waiting for you. Thanks.